The management at IOC, Mr. B. Ashok, Chairman at IOC, as well as Mr. A.K. Sharma, Director of Finance, now joins us. Good morning, gentlemen. Thank you so much for taking out time for us. Mr. Ashok, if you could, just start by the highlights of Q1. It's a record profit that we have seen into this particular quarter.
Yeah, in terms of the profit after tax, we have done 8,269 crores against 6,591 last year. An incremental profit of 1,678 crore. The primary reason for this has been the significant gains in inventory that we have had during the period.
Mr. Sharma, as far as inventory gains are concerned, that was the key reason why profits are looking better than estimates?
Yeah, inventory gains on the crude side were almost 3,700 crore rupees. And our GRM, which is without the inventory gains, as we said, is around $3.56, and with inventory gain it is $9.98.
Mr. Ashok, as far as GRMs are concerned, what is the outlook? Singapore GRMs have actually gone down, which means that the outlook for GRM may not be that great.
Certainly the market has been moving up and down. But the only thing that probably we believe is that during the current year we expect the crude oil prices to be more range bound. Of course, there will be movement up and down, but overall during the year we expect that to be range bound. So the volatility effect, while it is there, it is not expected to be as significant as it was during the last 2 years, unless something really changes in the world. So last couple of years we have seen a steep drop in the crude oil prices, due to which we had huge amounts of inventory losses. During the current year we do hope that that sort of a loss we will not be able to see. At the same time, the gains could also get somewhat muted over time. So the net impact should be a sort of a neutral position.
Right. So as you explained that inventory losses has been slightly, or losses or gains has slightly been on the volatile side. But as far as GRMs are concerned, what is the outlook that we are looking at? Is the outlook now pointing out that the best of GRMs is behind?
GRMs, including the inventory effect, we have had a GRM of $9.98 a barrel during the first quarter. But if you really back out the inventory effect, our GRMs are 3.56. But again here we have considered Paradip refinery into the equation. Paradip refinery, as you know, is still in the stabilization process. So if you back out the Paradip refinery, then our GRMs are of the order of $4.5 a barrel for the rest of the 10 refineries that we are operating. So $4.5 vis-a-vis $5.99 for the same period last year.
Mr. Sharma, volume growth compared to the peers was slightly lower. Have we lost out on some market share, or it's just a one quarter phenomena?
There was actually in the direct sale of HSD, there has been some reduction in the market share, obviously because of the state transport and some other business getting shared. So we will make up that in the retail business. Obviously the consumer business is based on tenders, so this market share on consumers will keep coming and going depending on the winning the tenders. But the retail, we are going strong, and we hope to recover that in retail.
As far as volume growth for the sector is concerned, what is it looking like? What's the number that we may see by the end of this year?
The overall volume right now, I will not be able to give you the actually figures, but then as far as the country is concerned, we are expecting a growth of 6 to 7% in the petroleum products in this year. So I am expecting company to perform very well, Paradip, which we are expecting will be very, very good.
Mr. Ashok, just about the new refinery, we spoke to the other peers of IOC, and we got a sense that the new refineries that are coming up for some of the other players have very high GRMs. Is that the case with Paradip refinery as well?
Once the refinery operates at close to full capacity, then the Paradip refinery is bound to give us much better GRMs compared to the rest of the refineries because of the technological capability of the refinery to process cheaper crudes, heavy crudes and so on.
Mr. Sharma, just a last word on Paradeep Refinery. What is the current capacity once we have full operations of this particular capacity coming in FY18? What would be the full strength of IOC?
Right now refinery is running almost on 50% of the capacity. So as I said, with the all units now getting commissioned, we expect the capacity to ramp up to 70, 80 and then up to 90, more than 90 in the coming months.
Thank you so much, gentlemen, for explaining about the IOC numbers and what's the way forward. That was the management of IOC first talking about numbers and then what's the update on their new plans. The stock is up around 4.